We have someone who's been tracking this entire space very closely. Rakesh Arora, the founder at GoIndiaStock.com, joins us now. Rakesh, for the cement space, it's been under pressure for a while. It's not only underperformed, there's been volume pressure, there was pricing pressure as well a couple of months ago. Do you believe that the worst is over for the cement space overall?
Yeah, I think cement space came under pressure because of rising costs. Both coal cost as well as diesel cost went up quite sharply, and these two account for more than 30% of their costs. So there was margin pressure which came in. Cement companies, as you would expect, given the discipline, they would raise cement prices. They have done it, but the cost pressure was intense. Plus, government was giving all the signals to the cement sector not to raise prices given the inflation, and that's where the stocks were underperforming. But now petcoke prices have come down, diesel prices are coming down, so the worst is already behind us, and the cement prices are already up like 25-30 rupee per bag from where they were pre this rise in cost. So costs will come down, but prices will stay. So I'm very bullish on the cement sector from the medium term perspective. I think they used to do around 1,000 rupees per ton EBITDA margin. I think for the next 5 years, probably they'll do around 1,400 to 1,500 rupees per ton EBITDA margin. So that's what really makes for a bull case.
Okay. So what's the approach from here on between the large cap cement stocks and mid cap? Which ones do you prefer from an investor standpoint?
So among the large caps, clearly, you have Ambuja and ACC, which is seeing change of hands. And the only difference between them and Ultratech was the growth option. And with an aggressive promoter coming in, I think growth would be, there for the taking. I totally disagree with the previous, speaker. Ultratech was gaining market share at the expense of Ambuja and ACC. Now that balance will be restored. So I don't think there's going to be any, war or such. But, Ambuja and ACC will start to grow at around 8 to 10%, which is where the industry would be growing. And that is what is going to change the PE rating in line with where Ultratech has been trading in the last few years.
Rakesh, good morning. There are so many theories in the market, right? Especially with Ambuja and ACC. That the share prices have surged way above the open offer price. So obviously there will be no tendering in the open offer. But anyway, I mean, do you think these kind of prices are sustainable the way they are trading?
Swaraj, you are expert in the market, but my 2 cents are that if investors are not willing to participate in this open offer and stocks have already moved up, there's no supply available at these levels. So that tells you something about where the investors or how the investors are thinking about the cement stocks. So I won't really worry too much whether something is tendered or not. There's no supply at this level for both these names.
Okay.
Rakesh, good morning. You said over the next 5 years you expect companies to make from $1,000 you expect, a 50% increase in EBITDA per ton. What will broadly drive that, and do you see no sort of cost pressures along the way?
So Prashant, if you look at last 20-year history, cement prices have moved in a step-up fashion. So, the last step-up happened when there was a big increase in costs in 2005 or 6, where, overloading of trucks was banned in India, and freight costs jumped by 80%. So we saw that cement companies which were making around 400, 500 rupees per bag, 400 to 500 rupees per ton, jumped to around 900 to 1,000 rupees. Now this cost pressure that we are seeing from coal and diesel has ensured that cement prices have moved up by around 25 to 30 rupee per bag. But I don't think coal prices can sustain at that $300 per ton level, or oil can sustain at $95, $100. They both will come down. So if you look at historical evidence, cement price never comes down once it reaches a particular level. It's going to bounce out around that level only. So that's why I'm very bullish that margins will expand, and that is the reason, as I said, I'm very bullish on the medium term model.
Okay, very bullish on the medium term. What about these stocks like Shree Cement, India Cements? I mean, Shree Cement, had done very well in the past. Do you think that it could sort of see some sort of outperformance yet again? And names like India Cement, Sanghi Industries, any thoughts here?
No, so Sonia, first of all, large caps have to move up. Ultratech is still like way below its all-time highs, and same is the case for Shree Cement. So the initial rally will be in large caps. Small caps and mid caps will take longer time. So I think it's too early to buy small caps. One should focus on large caps only.
Okay, Rakesh, we'll leave it. Sorry, Prashant.
Sorry, Anuj, since we have Rakesh, just wanted to, so moving away from cement, Rakesh, I don't know if you're reading this commentary, at least the drought situation in China. Industries are starting to, basically the government is saying that leave power for consumers, so they're asking factories to to close down. I mean, of course, right now apparently it's under 1% of, I think, aluminum capacity, for example. China's own aluminum capacity is being shut down, but expectation is if it continues, more will be asked to shut down. It's energy intensive. Any thoughts at all in terms of what's going on? I mean, if you've looked at it.
Yeah, so Prashant, meaning there was like a 30-second bounce in commodities because of this, but it hasn't lasted. The reason is that demand destruction is happening at a much faster clip in China than this production reduction, that because of energy shortages. So I'm actually not so bullish on commodities. I think the worst is yet to come through. Demand destruction is happening at a much faster pace, and supply is still pretty sufficient. So that's why you see, on LME, aluminum hasn't really moved up. It's still stuck at around $2,400 per ton. In fact, once the coal prices start to correct, which should happen by end of the year, when this European winter season is behind us, I think we should see fresh downside in aluminium. It will probably go down to $2,000 level, which is where a fair price for aluminium.
Oh, wow. So you said worst is yet to come for commodities. Would that include steel as well, Rakesh? Because, the market's been building some expectation on export duty cut. But would that even matter? I mean, if the prices have to come down?
So, Anuj, you have put it very correctly. It doesn't matter. Actually, export tax hasn't had any impact on the Indian steel market as yet. The prices of steel which have fallen is largely tracked coking coal prices, which are down. But now the converse is playing out. Coking coal prices are picking up because a lot of shift is happening from the lower grade of coking coal to thermal coal, where there's high demand, and the steel prices are dropping because demand is going down. So there will be cost pressures in Q3 from rising coking coal, and I think the steel prices, which already dropped from 77,000 rupees per ton in India to 57, will probably go down to 51, 52,000.